Hey, everybody, welcome back to FinTech Fridays. I am super excited this week to share uh, a new company, new product, a new leader that I'm meeting. Milo. Milo is the product. Andrew Penner is the founder and CEO. Andrew, welcome to FinTech Fridays.
Thank you.
I always talk about. I get most excited recording these episodes when I'm really getting a chance to meet somebody for the first time. And this is legit. You and I are literally outside of text exchanges meeting for the first time here on this podcast.
Exactly. It'll be a great initial conversation,
I hope so. We'll let
better way to
the
start
audience
out
be
than
the
in a public
judge.
forum.
So you got a great story, man. I spent some time with one of your colleagues a few weeks back, kind of learning about the product that you guys have been working on. And I think there's a heavy focus in our industry, around how better or how best to engage consumers wherever they are on their homeownership journey. We do that at FinLocker a little bit. And so I'm excited to kind of dig into the Milo product. And I always love talking to founders and understanding kind of where the idea came from. What was the problem that you were seeking to solve, and how did you come to understand the problem?
Yeah. I mean, it was interesting because, we started the company back in 2022, right at the beginning. And that was, for anyone who knows, right? The time when everything started to change. The era of abundance from COVID was winding down, and we started to move from a demand-induced housing shortage to now a supply-induced one. It was pretty clear that things were changing in the industry, and I had worked in the marketing side of things for a nationwide lender, Total Mortgage, for 6 years before that, and helped grow them 12x using a bunch of different strategies, like really engaging past clients. We were able to track back then that 20.6% of our loan officers' production came from marketing assisted production. And really wanted to try and find a way to both systemize that and apply it to more than just a single company. We had also at the time been using a couple different platforms to try and engage our client database, and just weren't seeing the results that we wanted. I think anyone who's been a decision maker in the tech side of the mortgage industry or marketing has been burned by a product or two that they've made an investment in under the best of intentions, and it never materialized. And so ended up creating Milo to really do a couple things. One, engage customers on a regular basis, but most importantly, two, monitor what they're doing and be able to bring that back to a loan officer, surface the highest opportunity prospects from their database back to them, because we know statistically in a market like this, somewhere between 5 to 7% of clients are going to transact in a given year.
Yep.
The problem is we don't know who those 5 to 7% are. And as we get, the customer persona ends up being more and more modernized, they're shopping more and more silently. We don't know when they really are ready to make a purchase until the very end, until they've made a decision on who they want to use. And so Milo was really engineered to get up funnel, find out when your customers are shopping, what they're doing, and then automate that outreach on behalf of the loan officer, because loan officers, for better or worse, they have a lot on their plate in any given day. They don't eat unless they close loans.
Right.
But if I'm a loan officer, I'm always going to prioritize the loans that are right in front of me. And prospecting always falls to the wayside. These consistent habits that we always try and preach to loan officers. You should be in a CRM every day and really be working your clients, whether it's active pipeline or close. It just tends to be the second, third, fourth priority. And so for us, a big focus as well was in automating that process and creating inbound conversations for the loan officer, not just outbound tasks to do.
I feverishly scratched down two notes. You already gave me two pieces of gold here right out of the gate. So I love the metrics around 5 to 7% of your clients. So I'm going to make the assumption here that when you say the LO's clients, you're really talking about like their past client database. Is that a fair
Exactly.
assumption?
Yep.
So that's a fascinating metric, and maybe on its surface we might think, oh, that's not very high, but it's actually pretty significant in the grand scheme of things, especially for a seasoned loan officer who's got 5 or 10 years worth of past clients in their database. That's and then
Yeah.
then the second nugget was the silent shoppers or the shopping silently. Uh, the risk is that if you're not engaging the 5 to 7 that are going to naturally transact, whether you're talking to them or not, your risk is that they are shopping you, or and I don't even think they even know they're shopping you as the loan officer. In a lot of cases, because of the duration between transactions in our business, we're all consumers. If I haven't had an engagement with my loan officer, my insurance agent, my real estate professional, new car salesman, whatever, and I'm now in the market for something, I'm probably not necessarily thinking of that loan officer. And so I'd love to just drill into. I think I've put it together where the problem that you're solving, and I'd love to just kind of drill into how your product is actually solving, for that problem for that loan officer.
Yeah, happy to. And even just to touch on those two things real quick. I mean, if you said we're all consumers, right? And if you look at where consumers are shopping right now, nobody's going to say, I'm going to, lenderxyz.com, right? They're going to Zillow, realtor.com, Redfin, all of these places where all of those sites have incentives to convert that customer and then
Right.
sell that lead to not just one usually, but many providers. And so, yeah, customers aren't, we know we close these customers with a great relationship. Usually you're helping them get into a home, right? That's a huge deal. And we think they're going to stay with us forever. And when they close, they have that intent. But throughout their decision-making process, throughout the entirety of the, let's say, 7 years between transactions, they're being driven to other people along the way. It's hard for them to remember your name. And even if they do, they're going to come in contact with other people. And so you need to be there first. You need to be the one who has the relationship with them. And the 5% figure I think is great because it shows for a loan officer who might have 500 deals in their closed client database. I mean, that's 25 deals you can pull out in a given year, right? That's if you figure a $350,000 loan amount, that's what, 9 million or so in production in a single year.
Yeah.
That's living just right off the bat before I do any new customer prospecting. But those are the deals that people let slip because 82% of clients end up using a different lender on their next transaction.
So you're saying that the branded cutting board doesn't keep that customer in my, engage with me?
It's a nice touch, but it's not getting the job done by itself. So where Milo comes in, right, is a couple different places. One is we engage that customer every month in ways that lenders have seen before, but with branded home value reports. That's a critical jumping off point because that's where you can really educate that customer on the options that are available to them and the biggest thing that we have going for us right now, which is the equity that a customer has in their home.
Yes.
High home prices, high interest rates, low affordability. People have golden handcuffs of those low rates. They don't want to move. So what do we have in our corner? Well, we have their equity because the average homeowner's gained, 50, 60% equity since the start of the pandemic. And so we need to lean into that as originators. And a lot of people get surprised and they'll actually consider things like a cash out refi or a HELOC or even selling their home to get liquidity from that investment. And so what we do is we put those numbers in front of the customer every month and we show them, hey, here's what you can do. We don't give them too much because we really believe, unlike some other platforms, that the lender should really, and the loan officer should be the one doing the selling. The platform should be educating to a certain point. But I mean, we have commissioned salespeople for a reason. They're great at selling. That's what they love to do. We just want to tee up conversations with them. So a big place where we separate ourselves there is in the fact that it's really conversion oriented and the customer tends to reach out much more frequently, about 3 times more than the leading competitor. But we also then watch what that customer is doing, both on our site and across the web, to be able to look for those little intent signals. are they saving homes? Are they, requesting tours? Are they searching frequently? How often are they checking their equity? And all of those little engagements start to add up and create kind of a buyer persona that can then tell us, okay, now is the time to reach out. So we can automate that outreach on the loan officer's behalf, or they can reach out if they'd like to have a little more control. But that is the identified moment in time.
Yeah.
And that's what we're really conscientious about, is making sure that we're taking not only explicit intent that comes through the value reports, but also this implicit intent, the behaviors that a customer takes on their way to selecting a loan officer or making a purchase or refinance, and making sure that we handle those appropriately.
Here's what I heard, and I love this. Your approach and your focus is really on helping scale the loan officer's impact through your platform, and because you've never talked about bifurcating or differentiating or taking the loan officer out of the equation. They're very much in the equation because your data, your insights, those alerts are really triggering those next best conversations to be had. Is that a fair kind of assessment?
Yeah, exactly. I mean, I think the best tech out there in mortgage looks to supplement, not replace, right?
Right.
And so, if you look at, again, where a loan officer spends their time, they're just not spending enough time, even in this market where loan officers arguably have more time than they ever had. They're just not spending that time prospecting their database. And in this market, you see a lot of people who just have this defeated attitude of, well, there's nothing there because all of my customers are locked into low rates. And they're leaving money on the table. Our platform really helps them take that back and do it with minimal effort and minimal adoption.
So this is where I start asking questions that might might go sideways, but this is our first conversation, so we're just happen to be recording it. Do loan officers have the ability to utilize your product on their own, or do they have to be part of an enterprise relationship with your platform?
Yeah, the majority of our product can be used on their own.
Okay.
So when you look at the home value reports, the associated insights that come with that, the ability to monitor across the web, all of those things are things that we'll offer to individual loan officers. There are certain things that we're actually rolling out now, such as a product that we call Rate AI, where we're doing basically daily real-time pricing of their entire database. Both closed customers and leads and pre-approvals, to be able to find these little window in time savings opportunities. Those we need integrations with.
Yeah.
Engine, right? We need an integration with the CRM to know the updated status. And so those are more enterprise only, but the majority of our features are actually able to be used by individuals as well.
Yeah, that's super. It's a smart approach. We've been at FinLocker, we've been at this a little bit ourselves, and we kind of have a hybrid, enterprise / loan officer model where, to your point, similar. If you want this full feature set, that only comes, with an enterprise relationship, because obviously there's work to be done, and you're not going to link up and integrate to CRM and other databases, for a single loan officer. It's just not cost effective. But it's a smart approach on your end.
And I mean, from a tech company perspective, right? I mean, going directly to the loan officer is a great way to sell. Yeah. It allows you to do bottom-up selling, where the loan officer can kind of percolate it up through their organization as they start to see results. You're closer to the end user, so you get better feedback. And, in certain markets like this one, a lot of lenders are focused on cutting back, whereas loan officers are willing to make that investment if it makes sense for them, right? So I think it's important to have both sides of it.
What's on the near-term horizon as you guys think about kind of the product roadmap? What are some cool things that folks should kind of keep an eye on throughout the summer, maybe into the fall?
Sure. One I kind of mentioned, which is Rate AI, right? We're really trying to get as granular as we can with repricing all those loans and making sure that, we kind of have an algorithm behind it that allows us to minimize API calls for lenders who are on things like OB, where there's a per API call type charge, but also maximize the impact across their entire database. So that's one. The second is really leveraging a lot of conversational AI to be able to take these conversations deeper. Where we've gotten to now is we've committed most of our focus to this point on identifying the moments to reach out and doing that initial outreach. But there's more to that equation. And so if we can continue to, through conversational AI, really qualify that customer and make sure that we're not just sending any response back to the loan officer when they don't need to see it, but instead sending the highest intent customers back, and really having that conversation, potentially getting a fully executed application before that gets back to the loan officer. That's the dream, and that's where you do get a little more into automation. And so for us, the reason it hasn't been rolled out yet is we're trying to strike that balance, right? And it's a constant journey of rolling out new things, getting feedback from the users on it, and then making sure that we're addressing it in the right way to improve business.
More curiosity than anything, since we're kind of both in the tech product space. As you guys, your product is B2B to C, but at the end of the day, in order for the middle B to get value and understand value and see value, you have to really serve that end user, the consumer, right?
Yep.
So does your product development process include direct engagement with consumers as well, to kind of collect that feedback and build it into your design process?
For sure. Yeah. And that's the stuff I love. Like, again, having the digital marketing background, that's one of the most exciting parts about it to me, is making sure that we're not only looking at aggregate analytics, but even micro analyzing individual user sessions to be able to really understand what they're finding most compelling, where they're struggling, right? But there's really two sides to that. One is, after that customer has been identified as high opportunity, how do we make the most of that? But yeah, we're constantly refining, especially the value report, to improve results. One of the problems that a lot of platforms have is you have this strong start. Like you first put that number in front of your audience and it's like, oh, wow, that looks great. And you have a big influx of intent from customers at the beginning, but then you start to see it taper off. And it settles at the end of this long tail where there's not much net new activity every month. For us, we're constantly innovating on the report, A/B testing different places, including new calls to action, to really try and drive more intent every single month from those consumers.
Yeah, I mean, that is the key, right? It's, to your point, you're going to get that initial surge of excitement, but it's how do you keep them consistently coming back? Another challenge that I'm sure you face, because we face it in our business, is, and I said this at the beginning, we're all consumers of some sort, right? And so if our customer is primarily a loan officer, they're also a consumer. In our world, we get a lot of our initial product feedback from loan officers, and the feedback comes in the form of them as a consumer, right? And I'm just more curious than anything how you kind of distill or temper feedback that comes from a loan officer representing the consumer feedback versus what really impacts the consumer. Because us, loan officers and you and I, we're in the business, we understand the business, and so we're obviously going to have a different eye on a product and how the product engages with us as consumers based on our knowledge and experience. That's not necessarily the same as the average consumer. And so I know this is something that kind of drives our product team batty sometimes, is that feedback that comes from that first line, which is the loan officer, and then trying to really massage the feedback in a way that's going to be meaningful to build into the product that's going to impact consumers at scale. I'm assuming you have the same challenge.
Yeah, I mean, it's always, especially when you have a large enough user base too, there's always the challenge of synthesizing feedback and then analyzing conflicting points of view, right? Lender A will tell you something, lender B will tell you the opposite, and how much credence and weight do you put behind each individual piece of feedback? And that's where I think it's important for an organization to constantly be testing. I think, first off, there's things where a loan officer is uniquely equipped to be able to answer versus a consumer through what their engagement is and some of the cold outreach that we might do. And so you have to take those things really seriously. Things like, what is the impact to my brand and my business. Those are things that a consumer cares very little about, but are profoundly important to a loan officer. And then on the lender level, you have things like, how is it impacting my loan officer's satisfaction?
Yeah.
Do I have to keep the finger on the pulse of adoption, right? That's one of the $1 million challenges for lenders. When I invest in a new piece of software, are my people actually using it? Do I have a chance even to get an ROI out of this if they don't? So it's important to listen to what those different feedback types are by audience. But then also really microanalyzing each thing and constantly testing, where if a loan officer, we've done things like a loan officer wants their contact info displayed in a different place on the report. You know what? Sure, let's try it out, because we're not going to say that we know best.
Yeah.
We're going to give it a shot. Let's look at the user engagement data. Let's see how far people are getting down the report, how many call to action clicks are done, right? What our expected recall is from that change. And then we can really decide whether it's a good change or not.
Yeah, I think that I love that we're having this recorded conversation for the audience, because on the vendor tech side, we have this constant influx of feedback, and I think it's important for our clients, and primarily those front end users, the loan officers, to understand their voice is important, but it's important only when we can test the impact of that feedback. And so, again, I just love that we're able to kind of share a little bit of our stories on that side together. Andrew, this has been awesome. These are the conversations I most enjoy, where I'm getting to learn for the first time, about products and companies and cool people. I appreciate you spending a little bit of time with me and my audience here on FinTech Fridays.
Of course. And thank you. Great questions. It was fun to connect.
Right on. So everybody, thanks for tuning in this week. Join us in 2 weeks for our next episode of FinTech Fridays. Thanks all.